Ladies and gentlemen, welcome to our webinar on the subject of RegTech, the frontrunner in the race for digital compliance. We hope you enjoy the presentation, and please note that there will be a live Q&A session at the end, so you're very welcome to submit your questions to us and also any commentary you might have. We will also be running opinion polls during the presentation, and you're very welcome to take part in those as well. We will be publishing the results during the presentation. So, what it is that we are discussing today. RegTech is winning the race to combat regulatory compliance, exposure, and mitigate conduct risk, especially in digital business environments. Why and how? We're going to be talking about this today. And today with us, we have Patrick Barnert, who is Chief Executive of Qumram, and Dilip Krishna, Managing Director, Deloitte and Touche, or as we all know it, Deloitte. So, very welcome to our experts, and let's start. What is driving the meteoric growth in RegTech? So, who would like to go first? Patrick, perhaps?
Yeah, thanks, Tanya, and welcome everybody. I think there are really three components today which are really driving the growth in RegTech. One is the ever-increasing amount of regulations coming up. There are tremendous numbers, right? About 155 changes happening every day, as an example, and companies need to deal with that. Number two is the compression or the compression around cost, right? Cost compression. There's a lot of pressure in the market for financial service organizations today. And the third one is the increase in personal liability. We see more and more the regulators going after the financial service organizations and putting higher fines out, but these days also going after the top management, right, and threatening with jail, as an example. So I think these are the three big growth driver, which we see that we have such a big RegTech momentum. Dilip, you wanna add to it?
Thank you, Patrick, and welcome everybody. Good morning, good afternoon, wherever you are in the world. Patrick, I would completely subscribe to all the things that you mentioned, and maybe underscore a couple of points here. You talked about personal liability, and that's something that we are seeing regulators across the globe just becoming more and more focused on. And the personal liability is not necessarily to put people on the spot, as it were, and not done from a malicious or a malicious intent of any kind, but really to underscore the point that senior executives in institutions are really responsible for the quality of their compliance metrics and the need for institutions to really focus on this. What has happened over the past several years of increased regulations is that different institutions have had to really chase down regulations almost one at a time, given in some cases very, very demanding and even what some might think of as unreasonable deadlines. They've had to build what you could describe reasonably as siloed solutions. These solutions work, they meet the regulations most often, but they do lead to both increased compliance costs and definitely, in many cases, institutions are forced to make some compromises in terms of quality. In some cases, the compromises are quite well known and the quality is quite well known, but there is still concern that that quality could be improved. And that's really where the focus on personal liability does come in, and it increases the stakes, as it were, for these institutions. Lastly, I talked about the siloed solutions, and that comes down to efficiency, both in terms of the cost of building the compliance solution for a given regulation and meeting it on an ongoing basis, a run cost basis, if you like. But also, as new regulations come along, regulators are really focused on making sure that that institutions go off of the same underlying set of information to act on compliance, both for regulatory needs, but also for internal risk management needs. And that's really hard to do when you have siloed solutions. So that's another reason where RegTech is becoming very much front and center as one of the capabilities that could alleviate this particular problem.
I like very much what you were saying, especially about there are solutions already in the place, and I would say the core processes and the basic processes are well covered today with certain solutions, like you were mentioning, siloed solution. I think what I see, or what we are seeing in our customer base, is that conduct risk is the new paradigm, especially on the compliance side. And conduct risk, right, is not as easy to control. And I think that's where personal liability is coming in, because it's really about changing a culture of an industry or changing the culture of companies, and I think that's what we're seeing today, and we're going to talk probably even more about that, right? What do we need to measure? Where are the biggest risks these days? And I think that behavioral the behavioral data is going to become very, very important, not only on the compliance side, but also on the business side. And I think that's what we're seeing as a typical trend also in RegTech. It's becoming more and more a data play.
Yeah, and Patrick, if I can just add one more comment, and then we'll turn it back to Lucy. I'm sure there are other questions coming in from everybody. But the one point you made about the culture of the organization, I think that actually has a driver for RegTech as well, because typically in compliance and regulation, what has happened in the past several years is there's been a justifiable focus on the second line of defense functions. So your compliance teams, your risk management teams, certainly people in finance, etc., have had a lot of focus in terms of regulation. But increasingly, there is a very clear understanding that none of that really can happen in the second line of defense alone. It has to happen within the first line of defense. And so you're moving really from a group which is still large. It's hundreds of people in many large institutions, but now you're moving to thousands or tens of thousands of people where they are responsible for compliance and the whole institution is responsible for compliance. So that transition does is it makes it in some ways impossible to really use non-technology solutions, if I might use that word, to address compliance. And it so mitigates a lot more towards a focus on different kinds of technology, which is really the combination of things we call RegTech these days.
Thank you very much, gentlemen. And cultural change, as you mentioned, of course, is something that is not easily implemented. But moving on to the next question. So, how does rising engagement via digital channels, so we're talking about web, social, mobile, increase compliance and conduct risk exposure? And how can RegTech help? Who would like to take that question?
I can take that as a starting point. I think what we're seeing these days really is there's an additional channel which came in, right? Omni-channel or digital channel, everything what's happening online, which overtook clearly the in-person meetings and in-person way to do business, right, through branches, or even on the phone with banking organizations, and that's growing fast. It's growing fast. So and it's not just an additional channel, right? There are multiple sub-channels, right? Digital means email, web, mobile apps, right? Social media, instant messaging, many of these, right, sub-channels, which are all aggregated through the term online or digital channel, and they bring a significantly higher complexity, because also the type of files or the type of media is increasing, right? It's not just a personal conversation or a phone call, right? Now you have text, you have pictures, you have audio, you have video, you have, right, a lot of more formats which you need to deal with. And lastly, right, it's a completely different data play. It's not only kind of the structured, it's heavily unstructured these days. So I think what we're seeing here is really the increase in complexity which is coming in from these digital channels. That's one way, right? The omni-channel and the implication on that. And I think the other one is the multi-touch, right? If we're looking to the stats, you see that desktop and mobile, right? It's 40 times more, right, than it was in the past through branches, or right, still 10 times more than it was through phone conversation with your financial institution. So what we're seeing is that the volume of touches, right, of customer interaction is significantly increasing, and that's one of the goals of the industry, is getting closer to their clients, right? They want to have significantly more touch points. Now we're talking about tremendous volume, and if you combine the volume and the complexity through these channels, right, that's something which really today, right, is increasing the risk exposure for many of the organizations there. So I think, right, it is very important that you have your act together from the get-go, right, because otherwise, with the volume and the complexity, you can easily lose control over it. How you see it, Dilip?
Yeah, Patrick, I think you touched on something that is, in my view, critical, and that's really the perfect storm that's happening in the industry right now. So you talked about the increasing number of touch points. We talked about the increasing number of channels, which is really what's on the slide here. And finally, we did talk earlier about the increasing number of regulations. So if you sort of add all of that, that leads to a situation where you really have to do quantitatively different things in the environment and in your institution to meet the regulations. Obviously, that leads to things like profusion of data and all of those other things that you talked about are absolutely very much on target. I tend to think about these issues from a couple of perspectives that I might like to add. So the first is that the customer business interaction is obviously important. It's obviously something that can get folks into a lot of trouble. But the other aspect is the complexity now with insider action, right? So you have, and by insider, I'm not necessarily only talking about things like insider trading, which is a problem, but about any interactions between people that work inside an institution. Those then become a lot more complex, and they do need to be monitored as well, from two perspectives at least. One is the actions of folks who are working inside an institution do need to be monitored. The recent focus in the financial industry on sales practices is a good example. But beyond that, there is a huge concern about cybersecurity, and the cybersecurity can lead to a lot of different problems that come out because of the fact that you're dealing with so many different channels, right? So that is, to me, a much different but a very significant problem that we see with our clients these days, and it's certainly not something that is easily handled by the traditional means of dealing with compliance by manual interactions and so forth. One really needs to make a quantum leap in terms of technologies, both because of the volume that we're talking about, but also because of the speed with which these interactions happen. And Patrick, you talked about the profusion of types of data. We certainly see people looking at not only obviously structured data in terms of databases and so forth, semi-structured data in terms of logs and so on, and of course text. But also we see people looking at voice logs and being able to extract information out of voice logs to understand whether compliance is being met. And these voice logs could be people talking to customers or internal conversations as well in some cases. So it becomes a much more complex problem that definitely requires technology in a very big way to be used to address the problem.
Yeah, you're right. We're back at the point where we're talking not only external, but especially internal monitoring, right? And what do we want to monitor? It is that behavioral, right? That behavior from internal, but also from external. I think also you touched very well on the cybersecurity. I think also there, social security being on the top of the list, right? When it comes down where people have the chance to intrude on an organization. So but we're back on that, right? That big trend which we're seeing in our customer base is many in the risk department are talking about that conduct risk, right? That behavioral, and they're all looking for a certain amount or certain insights and transparency around that behavior, and this is a big trend which we're seeing.
Mm-hmm.
Well, thank you very much, Patrick and Dilip. Plenty of food for thought there, and I'm sure plenty of questions as well. So moving on to the next point of discussion is cost. How can the cost of compliance be minimized without reducing protection for your customers and your business? Perhaps Patrick, you would like to start?
Or I leave it to Dilip, because Dilip, right, you were talking about the two ways to reduce the cost, right? You wanna go into that?
Yeah, let me do that. That'd be great. So I think actually, let me start off by saying there is just one way, in my view, to reduce cost, and that is, this is one word, is automation. Now there are obviously different ways in which automation can be affected, and automation is not the only thing clearly that needs to be done to meet compliance, but I think it is a very important aspect of it. The cost of compliance that you see in different institutions really arises from two different aspects in my view. One is every time a new regulation comes, there's a whole series of things that need to be put in place. Infrastructure need to be changed in some ways to meet that compliance requirement. So that becomes a big issue that needs to be dealt with. The second aspect is the outcome of that compliance needs to be demonstrated in various ways, most often in terms of reports and so on. But there are many other ways in which the outcome of the compliance efforts needs to be demonstrated to regulators, to internal stakeholders, to the board, et cetera, et cetera. So when we look at automation, I really think about this from two perspectives. There are existing processes, and often there needs to be compliance frameworks that need to be placed on top of existing processes. And there are a variety of different automation techniques, especially new automation techniques, such as robotics, machine learning, in some cases cognitive automation. Those are the kinds of things that actually can help very, very well address compliance requirements without necessarily requiring a huge amount of process reengineering. But the flip side of it, and I've heard several clients talk about this, is as if you take robotic view to it, you're really taking a bad process often and just making that bad process faster and more computerized. The flip side is actually to automate in a process reengineering manner, and that has its own tremendous benefits. So let me explain what I mean by that. Often, as I mentioned earlier, there is a need by regulators to require institutions to use the same underlying information and provide a variety of different cuts of that information. So you only need to look at things like capital regulation and liquidity regulation in financial institutions and so forth. And if you dig a couple of levels deeper into those regulations, you'll very quickly see that the information that they're dealing with are the same types of information, the trades that are happening on a regular basis, the loans that are being issued by the institution. It's really the same kind of information that you're dealing with. So the way in which we see institutions really take advantage of automation is to look at that data and think about how to integrate that data into one highly automated environment, and then do compliance regulations off of that environment. That has an additional benefit in terms of cost, that you are actually there's a lot of cost, obviously, in the first time you do it, but the second and the third and the fourth time you do it, you're going off of the same information, and the compliance costs can be dramatically lower. It could be 80% lower, for example, very, very significant reductions. And one other additional benefit, the focus that the institution places on the quality of the information that is provisioned at that provisioning point then flows into the quality of compliance submissions for everything else that you do from there. So there's not only a reduced cost of compliance from that perspective, but also a much increased quality of compliance that accrues from that as well. So Patrick, I'll turn it over to you. I'm sure you have some interesting comments based on what I just said.
No, I 100% agree, right? Couldn't agree more with everything what you said, especially the last topics, right, about the data set, right, reusing or just right, focusing on the same data set being reused in multiple fashion. And I think also looking to the slide here, right, the question is, does the cost reduction, right, or the trend, right, to minimize, right, is that somehow reducing the protection and increasing the risks? And I think exactly the points you were hitting, Dilip, is what we're seeing, especially of our solution within our customer base, like large organizations, right, banks across the world, and asset management firms or insurance firms, right? Compliance is one thing, but that data which is captured, right, for compliance, that can be reused, right, and with a different purpose within the organization, right? There could be a different view on it. Compliance often is, right, looking into the mirror, looking into the past, reactive, but there is more happening, right, that compliance becomes proactive. But what we're seeing is that data which is captured there, and we're talking back, right, multiple different data can be really used then to detect fraud and prevent fraud, right? So really to increase the protection around cyber risks, or to increase the cybersecurity internally. And what we also see is that same data, which they're gathering, right, because they have to, right, from a compliance standpoint, that same data can be used then also on the business side suddenly, right? So in call centers, to provide a better service, to increase the entire customer experience. And I think that's where an additionally big gain is coming, right? It reduces the risks. If you do compliance right, it's going to reduce your risks, right? And you're going to have synergies with the business. Let's face it, and let's be honest, right? Compliance today is often seen as the business preventers, right? The cost centers. They don't have a really good image internally, but I think, right, there's a tremendous value in the synergies with the business, right, around fraud, cybersecurity, but also in the business, right, around the customer experience.
Yeah, I couldn't agree with that more. In a very interesting way, the fact that everybody is able to blame costs on compliance can actually be helpful, because in some of the cases that I've had the opportunity to participate in, and institutions have done things in what we might consider a strategic manner. You actually end up blaming all the costs on compliance, and then you reap a lot of the business benefits at the back end for what seems like next to nothing. So all the investment goes into your compliance pool. That's something that's accepted as a necessary evil, and then all of a sudden you're able to generate huge business benefits based on the fact that you've already got infrastructure, data integration infrastructure, technology infrastructure, et cetera, that has been built on the back of this compliance requirement, and it ends up generating significant business benefits at very little cost. Often the business benefits that it generates would not have been possible to justify from a business case standpoint, as it would not be able to justify the cost to put that whole environment together. But really, if institutions have used compliance as the business case to actually put that infrastructure together, the benefits can accrue in significant, initially small but increasingly significant ways coming out at the back end. And that's what we see in a number of institutions, and it's quite interesting to contemplate how over the next few years, as the infrastructures in fact have been solidified within institutions, that this trend would continue.
Excellent points raised, and very good to see practical examples as well. So thanks a lot. And on to our next topic of discussion, which is all about innovation. So is the opportunity to increase innovation through spend on compliance realistic, or is it just simply wishful thinking?
Yeah, it's almost contradictory to what kind of the image out there is, right? Think about compliance being suddenly a driver for innovation, but really believe in that, right? Why? Because again, I've been using here a picture. If you see everything what's happening on the compliance side, right? These days, all the new regulations, the Department of Labor fiduciary rules coming out April next year in the US, right? MiFID II, 2018, FFCA, and so on. All these newer regulations, even outside of financial service, right, are very customer-centric. It's about protecting the retiree, it's about protecting the investor, it's about protecting the consumer, it's about protecting the private person, and so on, right? So that's really at the heart of these new rules and regulations, which leads then to changes on the product side, higher product liability. You're not allowed to sell all products to everyone, right? It needs to be suitable, appropriate. New governance processes coming in, right? You need to train your people to change the behavior, and so on and so forth, right? And again, it starts with that customer behavioral data at the heart and at the center of these changes in regulations. And if you look, but on the other side, right, the business today, right, if you look to all these Airbnbs, right, which owns no beds, or if you go and you take Uber, they don't own a taxi, but what they own is they own the customer and the customer experience, right? So at the innovation, at every innovation these days, right, it starts with the customer centricity. And again, customer centricity means transparency, better understanding what your customer are doing. So I believe, right, what we're seeing is that that the compliance and the risk department, with the data they're gathering these days, right, they can help internally their organization to innovate. I really believe that there is a big opportunity to reposition the compliance organization and the compliance people, right, as a driver for innovation within their organization. Dilip, I don't know how you see that.
Yeah, thank you. And I agree with the sentiments, absolutely. I think the challenge that risk management or compliance groups have is being able to make sure that the organization gets that, right? Because I think you mentioned this very early on, that compliance requirements and the dollars and money that is spent on compliance is something that is often looked at as sucking away the investments that could be made into innovation in the organization. And that does put compliance in often a poor light in terms of being able to be viewed as a leader, in fact, in innovation. So I think that's a cultural problem that compliance and risk management groups have to start with. But there is a way, like you mentioned, Patrick, to turn that around and actually use compliance spending as a way to increase innovation. And it really boils down to the fact that increasingly compliance questions, the kinds of things that you ask yourself in terms of what you might want to do from a risk management standpoint. And you talk about Airbnb and Uber. There are lots of other examples like that where from a reputational standpoint, you want to think about, on the one hand, obviously complying with the requirements, but many of those requirements are also things that you would want to do in terms of good business to protect the business from both financial damages, it could be legal damages, those sorts of things, but also reputational damage. And one can only turn to a few recent cases and see how much reputational damage can be done by very, very significant but pointed issues. So if you sort of think from that standpoint and recognize that the questions that are being asked from a compliance standpoint are in fact the same questions that should be asked in many cases from a business standpoint, then you can begin to merge innovation and convert the spend on compliance into spend on innovation within the organization. For example, I brought up data integration, and I talked about the data warehouse, for example, as a way to improve the quality of compliance. But that same information can be used to figure out how to segregate different classes of risk in your customer base and understand in a very granular way not only the risks but also the returns that are accruing from a very, very granular cohorts of customers. It could be even one customer, and that can lead to a tremendous amount of increased and enriched feedback with the customer. Imagine a customer who has multiple relationships, and those relationships tend to be, for whatever reason, because either the customer is a very low-risk customer or somehow the returns from the customer are very high. Imagine if that customer had a problem with the institution and the institution could react rapidly and be very, very generous with that customer and know that they could afford to be generous with the customer as opposed to another customer that is not having such high returns. Imagine how much stronger the satisfaction of that customer would be, the stickiness of the customer, and at the end of the day, the larger share of wallet that you would gain. So those are the kinds of things that can be what I generally call offensive moves that institutions can make using compliance spending, and especially if it's done from a strategic standpoint and from the standpoint of increased innovation.
Great. Thanks very much, gentlemen. We are now going to take some questions from the audience. And the first question is, what are the regulatory requirements for record keeping relating to online, social, and mobile channels?
I can take that. All the existing record keeping rules, right, apply also to digital channels. So if you're in US, you look to the SEC 17A4 rule or the FINRA 3110 rules, right? Or if you see what's coming or what was in MiFID 1, but what's coming in MiFID 2, they all now mention, right, that every electronic communication need to be captured, right, need to be stored and be reviewed and analyzed and replayed. Right, the requirements were out there in the past, and it's just now a different channel, and the requirements are still valid. What we're seeing in the new kind of requirements or in the new regulations, it's that it's explicit in, and they're talking about electronic communication, additionally to the phone conversation and personal in meeting minutes as an example. So yeah, it's just a must-have, right, in every market.
Okay, thanks a lot. So next question. The advisors in our firm are asking to use social media to communicate with customers. So can RegTech be used to ensure that we remain compliant? Either Patrick, perhaps you could take this one as well?
I don't know, Dilip, if, yeah.
Oh.
You want to go, Dilip, or shall I?
Well, sure, I'll answer, and I'm sure you have thoughts on this as well. Social media is a a fact of life, and absolutely RegTech should be used to address this, because I think Patrick mentioned this earlier. The fact that you're using social media or any other medium of communication doesn't excuse institutions from following the letter of the law in terms of compliance, right? So it's important to think about how to make sure that even if social media is used as your method of communication with clients, the laws are still being followed, the compliance regulations are still being followed. There are many ways in which social media information can be captured and then analyzed. We talked about that earlier, so I won't belabor those points. The only comment I would make in terms of social media, just to add to the question itself, is even if it is not a question of communicating with clients with social media, institutions are now much more focused on social media, not only in terms of communication, but also in terms of reputational impact, and being able to look at social media to tell them whether there are problems and challenges that they should be addressing early on, which might initially have arisen from interactions with those customers through other channels. So, for example, people might call into a call center and be unhappy with the kind of interactions they have, and they might express those aspects of unhappiness within social media. So the key point is monitoring social media is very important from a variety of perspectives that pertain to, obviously, interaction through social media, but other channels as well. So Patrick, I'll turn it over to you for your thoughts on that.
Just adding to it, right, we see especially instant messaging application or kind of WhatsApp, especially in Europe. WhatsApp is big, and we see more and more banks which are starting now to allow their relationship manager to engage with their clients right on WhatsApp. It is end-to-end encrypted, so it makes it increased that complexity which we're talking also in the questions before. It makes it really difficult, right, to fulfill all the regulatory requirements. But there is technology out there, so there are multiple vendors, Qumram being one of them, which allow kind of to record everything what your relationship manager and the customer are interacting on WhatsApp. We have customers which we're serving in Asia, which want to leverage WeChat, which is very big there, to communicate. So this is, right, it goes back to what we were saying, is that digital age, right, these new digital channels, right, they are making it a little bit more complex, and that's where RegTech is playing in. That's exactly the sweet spot of technology.
Great, thank you very much, Dilip and Patrick. And on the subject, another question. We have an existing system that records website visits to analyze customer experience. Does that mean that we already have technology, or RegTech, in place that is helping to meet regulatory requirements?
Yeah, the question is, do we have RegTech in place? RegTech is not a 100% scientific, well-defined term, right? There's trend in the market since years, right? GRC, governance, risk, and compliance solution, or legal technology out there. It's like Dilip was saying at the beginning, right? There are solutions in place today which were well kind of suited for the basic processes, and their siloed application or siloed solution. I think what we're seeing is that many of these solutions in place are not sufficient, right, for the challenge which are happening these days with the growth in digital channels. So if you have already a solution in place, right, I would recommend to dig into it and really see if that is suitable for the future. We see in many of our clients, right, that the solution they put in place 3, 4, 5 years ago, they're far away, not anymore suitable to fulfill all the regulatory requirements. And especially they don't add the additional benefits which we were talking today, right, on how can you leverage a good solution for other things, and especially the data quality which Dilip was talking about.
Okay.
Yeah, I would just add a comment to that, Tanya. I think the question was about storing that information, which is and I would say yes, you do have a RegTech solution in place. It's probably not the only one that you need, is what I would say. Storing is one aspect, but it's also the analysis of that stored data is very important. And that's really what Patrick was referring to a moment ago. So if you think about both aspects, technologies are needed in both cases, and of course one needs to really look carefully as to what the requirements are, both from a compliance standpoint as well as potentially other business, and that helps you determine whether you have got the right RegTech in place at this point.
Okay, great. Thanks a lot. Well, we've got loads of questions, so let's take a couple more, if you don't mind. So a question about regulators. So what should be the role of regulator in promoting RegTech?
Well, Dilip, you want to go?
Yeah, let me try my hand at that. So I think regulators have a very important set of roles in RegTech, and there are maybe 2 or 3 different flavors to that. So first, regulators are very critical in ensuring that they understand all the different kinds of technology. And this is not just RegTech, but it's just tech. And understanding the different kinds of tech and understanding what the impact of regulations would be on those various technologies. In some cases, you're seeing regulators thinking a lot more about technologies like blockchain and so forth. And so those are, I think, very, very proper actions being taken by regulators to really think carefully about the impact of these technologies on really the economy and on all of our lives. So that's one aspect of their views. The other aspect that I would say, and this is where we are seeing regulators getting more and more knowledgeable, is as institutions are putting different types of RegTech into place, it's incumbent upon regulators to understand the implications of the technologies that are being put into place. In many cases, what those technologies allow institutions to do are achieve the same goals, of course, and the goals are we have to be compliant, we've got to have the right behaviors inside the organization, we've got to have the right proofs of those behaviors, etc., but achieve those requirements in radically different ways. And it's important that regulators understand how those behaviors are achieved in ways that they may not be comfortable with. So in the past, in really old days, if you like, regulators and internal compliance teams would do a lot of sample testing and manual intervention and those sorts of things. And when you have a new regime where you have a lot of automation, much of that is not required. But the flip side of it is that if you have more automation, other kinds of risks begin to present themselves, and we are seeing regulators thinking about those risks. So when you look at implementing technology, you could always put technology in place and miscode a process, as it were, put the process in a wrong way, and what you're going to get is a very consistent misapplication of technology, which nobody wants. So we're beginning to see regulators really think about the implementation aspects of RegTech, and I think that is also a proper reaction to where things need to be. So Patrick, I'll ask you for your comments on that.
I'm going to make it really short. I think this is when I talk to regulators, these are the 2 things which I tell them. Number one is the art of the possible, right? They need to understand how technology can be leveraged today, right, in financial services for new services, right? And then also from a RegTech standpoint, right, that they're enabled and understand what technology brings to the table. So I think that's right. What is the role? I think number one for the regulators is understand the art of the possible, what technology can bring. I think number 2 is use technology, right, for yourself, for the regulators. And the regulators are still coming up with words and paper and so on, but I think they need to digitally transform themselves. They need to come up and they need to use technology themselves, right, to manage the monitoring of the players in the market, but also right to manage the volume of interaction engagements right with the financial service players. And I think that it goes back into you need to become tech savvy as a regulator, and this is something which I don't see enough, right? So from a role standpoint, I think first step is get an understanding, and second step, right, become yourself, right, more tech savvy, and leverage the technology for yourself. These are the two things which I would add to what you were saying, Dilip.
Great, thanks a lot. And we cannot possibly not have a question about the cloud. So RegTech solutions in the cloud, how do you manage the data protection when it's in the cloud?
Let me take a quick shot at that. I think the answer to that is very, very carefully. is probably the solution that I would say everybody's looking at. I think the data protection aspects and really the issue is rather complex because there are compliance issues with data protection that cause problems. There's also reputational issues. A number of institutions that we see are looking at really looking at the cloud, obviously, in from its cost perspective and the fact that you can roll things out quickly and so on. But I think the institutions that we are working with are looking at the cloud, I think, very, very gingerly, and there's not as much adoption, I would say, as you would expect with the cloud in those places, purely because of the fact that there are a lot of different concerns, and cost is so far not something that we have seen as the primary driver of compliance. I do expect that to change over the next little while. In very recent future, I would expect, or very, very near future, I expect that to change. But so far, the cloud is very much a frontier that is unexplored, in my view, in terms of RegTech, especially when we look at sensitive information like customer information and internal financial information. Patrick, I don't know what you've seen and how that calibrates with what I just described.
Yeah, I'm always asking a question back if someone is coming up with that question, right? RegTech in the cloud, data protection. So is that a question about security, right, in the cloud, or is it a question about compliance? I mean, if it's about that data, right, could be lost, or that data could be stolen and then becoming visible, right? Then we're in a security question, right? And I think there's no debate if you leverage cloud, but if you are using it internally behind your firewall, it needs to be safe, right? So no debate about that. And if we're talking about compliance, right, then it's less the discussion about the cloud itself, right? Then it's more the discussion about what data do you capture, right, and how it is used, and for what is it used, and how you manage that data through the entire kind of lifetime or life cycle of the data. You have that under control, right? Are you able, right, to give insight to, as an example, data protection to your clients, right? Which data you're storing about them and how it's managed. We're talking about data governance there, and then where it's managed, right? There are regulations which are saying, hey, you can put it in the cloud, but it needs to stay within the country, right? I'm not aware that any data protection rule out there is saying is you're not allowed to go into the cloud. So I think you just need to manage it well. So I'm a big believer, right, that everything's gonna go cloud. It's a question about it's a timing question, and I think that is a longer question, right, to go into the details. Are we talking about security? Or are we talking really about the compliance and the requirements, right, from a compliance standpoint?
Okay, thanks a lot. I think we can always continue the debate and the conversation and the Q&A offline. And the contact details for our experts will be provided in this presentation, which will be emailed to all the attendees of this webinar. And also, just quickly to say that the recording will be available as of tomorrow on the FinTech Futures YouTube channel, so you're very welcome to check it out. And we can, of course, also continue discussing RegTech at the upcoming RegTech Futures International Summit, which is organized by FinTech Futures. And we've got Lisa Moyle with us here, who is Strategy Director at FinTech Futures, and she can say a few words about it.
Thank you, Tanya. Thanks, Tanya. I just, first off, wanted to thank Dilip and Patrick for taking the time. Their contributions were really interesting and actually give us a great taste of some of the discussions that will be taking place at the RegTech Futures Summit in Amsterdam on the 9th of December. And also, obviously, thanks to Qumram for their participation today and for supporting the summit in December. I should also note, thank you to Tanya. And Tanya Andreasyan will also be speaking at that summit along with a great range of participants and speakers. So thanks again to everyone for joining today.
Excellent. Thanks a lot to our experts. And here are our contact details. We'll be very happy to hear from you. And thanks everyone for joining, listening, asking questions, and participating in the RegTech debate.
Thank you very much, Tanya and Dilip, for that conversation. Looking forward to see you, Dilip, next week, and Tanya in Amsterdam. Thank you.
Very good. Thank you.